Hello and welcome. This is a citywide and contracting labor laws webinar for nonprofit grantees. You are at our minimum compensation ordinance MCO session, and this is session 2, and this is also a re-recording. We had issues with our recording from April 22nd, 2025. So if you're joining us, this is a re-recording, and as a bonus, we are going to unpack some more items in this particular presentation. So please stay all the way to the end when we go through questions and answers, and we're going to really provide a lot more info than what we provided during the live question and answer session on the 22nd. So a little bonus for you. So my name is Beverly Popek. I'm a supervising compliance officer with the Office of Labor Standards Enforcement, and I'm going to introduce the presenter today, my colleague Jade San Diego. Good morning, Jade.
Thank you, Beverly. Good morning, everyone. Again, my name is Jade San Diego, and I will be going over the minimum compensation ordinance. And now keep in mind, this law is different than the citywide laws a lot of us are already familiar with. This is a contractor law, meaning if you want to work on a contract with the city and county of San Francisco, you must ensure compliance with this law. So moving on, the MCO applies to non-construction workers who work on the San Francisco contract. This law covers workers regardless of where the work is being performed, as long as it is in the U.S. Now, some examples of these workers, the workers who are covered under these laws are office staff, project managers, and architects who perform work on the city and county of San Francisco contract. So let's get a better understanding of the MCO. First, you need to determine if the MCO applies to your firm and your employees. A covered employer is anyone with 5 or more workers working anywhere in the world. They have to have a contract with the city, and this also applies to subs. So if you're going to hire a sub, it is your responsibility as the prime to make sure your subs also comply with the MCO requirements. After determining that you are a covered employer, you need to determine who those covered employees are. A covered employee is anyone working for that covered employer on the city contract, and if they are performing the work in the US, regardless of the number of hours they work. Now, there are some nonprofit organization exclusions, and this information can be found in the rules and regulations, but there is a youth exemption. So if the employee is under the age of 19 and is a dependent for federal tax purposes, then this employee would not be covered under the minimum compensation ordinance. However, once that employee turns 19, then they become a covered employee under the MCO, and it is the responsibility of the employer to track this information because once they turn 19, then you are required to provide the MCO benefits. And you can see Rule 4 for more information. But basically, you have to have proof that the employee is under 19, and this can be a birth certificate, a passport, or any government issued document, and then any verification from the youth's guardian that they are claimed as a dependent. Okay, so just keep that in mind. Now, now that we know who is covered, let's talk about complying with MCO. The compensation part of MCO consists of both wages and time off. Wages is the hourly rate that the employee is getting paid, and this is dependent on the type of firm that you are. So for nonprofits, the current rate is $20.25 per hour. However, if you, the nonprofit, hire a subcontractor who is for profit, make sure that they pay the covered employees the current for-profit rate of $20.96 per hour. Again, it is your responsibility to make sure your subs comply with the MCO requirements. The wages must be paid at the current rate that's listed on our website. And remember, the rates do increase every July 1st. For nonprofits, there may be an increase in July to $21.55, but this is dependent on the city's budget. Once OLSC receives information regarding these rates, we can send out an email and post the information on our website. Now, the time off key requirement has two parts, paid time off and unpaid time off. For PTO, the ordinance requires the employer to provide 12 days of paid time off for a 40-hour work week employee. And for employees who work less than the 40 hours a week, there is that accrual rate shown. But remember, there is no waiting period to use the accrued PTO, and this is the property of the worker, so it does need to be paid out upon separation. For unpaid time off or UTO, the employer is required to provide 10 days for a 40-hour work week employee. And then there's also that accrual rate for employees who work less than the 40 hours per week. And this does not apply to temporary or on-call employees. And employees can use UTO as unpaid sick time to care for themselves or family members. Now, I understand that this is a lot of information. So here is a link to the MCO website. And then there's also the link for the MCO rules and regulations so that you can access that later on as needed, as these will have more detailed information about the PTO and UTO, as well as other requirements. Now let's go over the MCO form requirements. There are 3 forms that we will go over: the declaration forms, the posters, and the Know Your Rights forms. Let's start off with the declaration forms. This form is required for city contracts that are $25,000 or more. And when you fill out these forms, you're basically agreeing to comply with the ordinances when and if the ordinances apply to your firm. And just remember that a department cannot request a waiver or exemption for the declaration forms, as this is a requirement. Here is a copy of the MCO declaration form. This form highlights the requirements and clarifies where to go for details on how to comply with the MCO. I do want to bring your attention to the execution section, which is at the bottom of the form. When you fill out the forms, make sure that the firm name and the federal tax ID number matches exactly how you registered your firm in the supplier portal account. So, for example, if you registered your firm in the supplier portal with a name that includes an Inc. or an INC at the end of the name, and you fill out the declaration form without the INC, then the declaration may get returned to you for revision. So just make sure you have it exactly the way you have it in the supplier portal account. But if you have any questions, you can contact us about what executing the form means to you and your firm. But please make sure to submit the completed form to SF City Partner Support at sfgov.org, which is also on the form under where to send the form to. The second required form is the MCO posters. The posters inform workers of their rights under the ordinances, and this notice needs to be posted in a common place, for example, the break room. And then if you have employees who work remotely or in isolated locations, you can email the notice to them or make the notice available on your firm's intranet page. The posters are available on our website in multiple languages, and it needs to be posted no later than 30 days after the new wage rate takes effect. The last required form is the MCO Know Your Rights form. This is provided to the employees to fill out, and this is basically acknowledging that they are aware of their rights under the MCO. So we suggest you have new hires complete the Know Your Rights forms at onboarding and have current employees who perform work on the San Francisco contract also complete this form. We update the posters and the Know Your Rights form at least on an annual basis before that July 1st increase with the updated MCO rates. Some compliance reminders, as previously mentioned, the rates are adjusted every July 1st, so you have to provide your employees the required forms on an annual basis by July 1st. When there are changes at other times during the year, we do update the form and notify email subscribers and include the updated form on our website. Make sure to keep the executed forms for 3 years after the termination of the San Francisco contract for your records. And then just some other resources that's available to you. We do have the MCO and the HCAO webinars, rules and regulations, frequently asked questions on our website, along with all of the posters and forms that's available for you to print or download. Here is the website for the Minimum Compensation Ordinance, as well as our direct contact information. Please feel free to reach out to us with any questions. And this brings us to the end of this session. And I believe we are going over the questions from the 422 webinar. Beverly?
Sure. Thanks again for sticking with us until the end here. So, as mentioned before, this is a re-recording, and we had questions that we received through our questions and answers box from the viewers at that time. What we want to do today is we want to go through the questions that were asked from that presentation, as well as answers, and also give you a little bit more of a bonus and unpacking of information that I think is a little bit more helpful too. So first of all, let's talk about that youth exemption. And the youth exemption, and maybe let's just go to the slide since we're here. So let's see, did I pass it? So look, not every nonprofit will use or want to use the youth exemption. This is an option for you. And if you indeed want to use the youth exemption, it's kind of clear what you need to do under the rules and regulations, Rule 4, in our rules and regulations book for the MCO. You need to have documentation such as government ID that shows that the participant is under the age of 19, and this is an and a requirement, you need to have some sort of signed document from the parents and or guardian of that youth that basically says they're being claimed as a dependent for federal tax income purposes. Those two items, you track it, and then you have the youth exclusion or exemption, meaning you don't have to comply with the minimum compensation ordinance for that particular youth until they reach 19. And if they turn 19 in the middle of your program, you just have to do it. With that said, now you're thinking, well, if they're not under the minimum compensation ordinance and we have this exclusion, we have all our documents and stuff in order, what labor law or labor laws do we have to comply with for the youth? So the two you'd have to comply with for that particular youth if you have this exclusion would be the San Francisco minimum wage and the San Francisco paid sick leave. And again, you have to keep track of it. You're responsible for keeping the information 3 years after the termination of that particular contract. And once they turn 19, if you have that exclusion, They are eligible and they are covered under the minimum compensation ordinance. So just wanted to really highlight that and bring in how this particular exclusion is related to our different labor laws. And if you have any questions, feel free to contact our MCO unit and we can help you get all the details you need. All right. So Jade, anything to add with the youth exemption because this has come up quite a bit from our nonprofits.
Yeah, no, thank you, Beverly. I think you've covered it.
Okay, great. So let's go to some of the questions that were asked back on the 22nd. So the first question here is, I'm a nonprofit prime contractor. I have a for-profit subcontractor. MCO applies to all primes and subcontractors on the San Francisco contract. Does the subcontractor, which is the for-profit, need to comply with the for-profit or nonprofit MCO compensation rate?
Okay, so they would need to comply with the for-profit rate. Each entity needs to comply with the compensation rate that is appropriate for their type of business. So, for example, if they're a for-profit, they need to go with a for-profit rate, and if they're a nonprofit, then it would be the nonprofit rate.
All right, thanks for that. The second question, does having a collective bargaining agreement, CBA, exempt us from the MCO? I have a CBA with a union. I should be in compliance, right?
Yes, I remember that question, and that's a really good question. And the answer is no, not necessarily. Having that CBA with a union doesn't necessarily mean you are compliant. It depends if the language in the CBA is compliant. So, for example, if there is a waiting period for a worker to access the accrued time off, then having that wait period usually means that the policy is not compliant. So it's just best to reach out to our office for further assistance and for further review.
And when we say not compliant, we're saying it's not in compliance with the MCO, the minimum compensation ordinance, and giving you a more specific example of what we've seen that it's common is that if there's that wait period for a new employee, a probationary wait time where you are allowed through your union contract to not accrue and not have the new employee access time off for the first 3 months while you try them out or any amount of time. That is not in compliance with the minimum compensation ordinance. So that's one of the examples, and that's something that we see very often. Now, there is something to be said about collective bargaining agreements and things to be aware of. If you have a collective bargaining agreement and you have a waiver, MCO waiver, that means that you, your organization, your company, and the union have both decided to waive the MCO. And waive means you don't have to comply with the MCO. Now, if you have that waiver language in your CBA, that means you don't have to comply with the MCO. It has to be expressively stated. It has to spell out that both parties are waiving the minimum compensation ordinance. We've seen some CBAs where it's very broad. It says we're waiving all wage laws and time off laws and things like that. That would not be acceptable. It has to be explicitly said. There's a standard to that. Obviously, if you say you're waiving the minimum wage and the time off, it's not going to be accepted as well. It has to be explicitly said that it's a minimum compensation ordinance. All right, so that's some info about the collective bargaining agreements. Our next question that we had from the 22nd was about unlimited paid time off. So the question we received in the Q&A box was, we offer unlimited PTO to our employees, so we should be in compliance, right?
Thank you. So another really good question. So a contractor can offer unlimited PTO. But when a covered employee separates from employment, that contractor needs to make sure that the employee either used up the 12 days of PTO, of course, if they're a 40-hour work week employee, or pay out any remaining balance for any unused PTO that the employee accrued based on the MCO accruals. If the contractor doesn't track PTO use, then the contractor would have to pay the employee for all of the PTO that would have been accrued at that MCO PTO accrual rate. So yes, the employer can offer unlimited PTO, but it is still best to track it.
Great. So the next question that was asked on the 22nd was about holidays. I guess paid holidays that the nonprofit offers and provides. Do holidays count toward the PTO accruals? That was a question.
So typically the holidays do not count because the employees are not able to take off they're not able to take the day off at their discretion unless the company offers floating holidays where the employee can use it as whenever they need it. Then yes, but set holidays are usually not included in the MCO PTO accruals because it's a set holiday.
Next question. When an employee terminates, do we have to pay at the minimum MCO compensation rate or at their final rate, which might be higher than the MCO compensation rate?
Okay, so when an employee separates, the employer needs to pay the final rate of pay. Any remaining PTO balance would be they need to pay at the final rate of pay.
Thanks for that. So, folks, I think you understand, and Jade mentioned this earlier on the slides with paid time off, that paid time off are issues are the most common violations that we see in our office. We have an MCO rules and regulations document for you, and starting on Rule 6 of that particular document, you can read all about different ways of administrating and understanding paid time off. Not everyone has paid time off. You may have a combo vacation and sick, and even with that, we've seen vacation, sick, floating holidays, PTO, so many different banks. That's all awesome. But how does it all come together, and is it in compliance with the MCO? Take a look at that rules and regs document starting on Rule 6, and you'll see a lot of information there. And then if you have discovered or you're thinking that maybe your policy is not in compliance, feel free to contact us. We have a voluntary compliance program, and we'll work with you on that program under voluntary compliance. Um, if you are not currently actively in an investigation. And this program would allow you to work with us. If you owe anything to workers, we'll figure it out together, and we will not charge any liquidated damages or penalties. So it's a great savings. And, we know that you're trying to do your best and you're proactive, and we thank you for listening and watching and contemplating this. But I would say on an annual basis, you should really look at your policies, procedures, and then from there, you should really do an audit and see how things are being implemented. A lot of the issues folks have is either with the policies and procedures, and then, of course, the administration implementations of such policies and procedures. You can have a compliant policy, but if the accrual rate is incorrect in your payroll system, or there's a misunderstanding somewhere and a human is involved and they're doing it just wrong, it is a violation. We're here to help you, so don't be too concerned. Just contact us, and we can walk you through the process, whatever the next steps are, if any. All right, so that was a shout out to our voluntary compliance program, and most of our cases and work here are on voluntary compliance program. So that's really wonderful, and thank you all for being very proactive in trying to be in compliance and learning this. So let's see. Our next question from the 22nd, Jade. What part of the MCO does your office see the most issues for employers to comply with the MCO?
Well, yeah, so like you said earlier, Beverly, it's PTO. A lot of the times, those are the most common violations that we see is basically PTO, where the accrual rate will come up short, or if PTO is not accessible to the employee as it's accrued, either because there's that waiting period, or or even not paying PTO out in full at termination. So it basically it's yeah, PTO like you mentioned earlier.
Great. And so let's see. Let's talk about this last question. When does the MCO rate increase? And how can I get information about the rates?
So the rates do increase every July 1st. For I mentioned earlier for nonprofits, there may be that increase in July to the 2155. Thank you, Beverly, for going back to that slide. And then, but this increase is dependent on the city's budget. Um, our office doesn't usually receive this information from the controller's office until about August or September, because again, that is based on the city's budget. But once we receive that information, then we will send out an email and post the information on the MCO webpage. And you can also sign up for our on our website to receive any email updates from our office.
Yeah, thanks for that. And we get a lot of questions on this, and you're all nonprofits watching this, and hopefully you're only nonprofits watching this information because this presentation is customized for nonprofits. So, folks, I mean, the the rate, the nonprofit rate, has been legislated, meaning this has been passed. However, written in the ordinance, the law, the rate for nonprofits and any increases is contingent on the city's budget, meaning does the city and county of San Francisco have the funds to approve and go forward with the increase? So, yeah, it's in the ordinance. We have a schedule of increases with some dates. But the big question with an asterisk, as you can see on this particular slide, it's contingent on the city's budget. And as Jade said, the budget is usually not finalized and known in June or even on July 1st. That is a bit of a concern for, I'm sure, you and everyone, and including us, because we're always just waiting. So please be patient and wait for information that we will publish on our MCO webpage. That is the place that you will see what is approved by the city's budget. And if there's no information that, the rate goes up, the rate remains the same. So currently, at the time of recording, we are in May 7th of 2025, and the rate, the nonprofit rate, is $20.25. If July 1st comes around and we don't receive information to say to everyone that yes, indeed, the nonprofit rate is increasing, you just continue to comply with the current rate, and you'll do so until you receive information about an increase. So that's how it works. Please be patient. We appreciate that. We only have information when we're given information. And if you haven't already, I know Jade said this, but sign up for our email updates to receive periodic information, especially about this rate. We would put it on our website, and we would send out an e-blast to our subscribers to let everyone know that a rate is increasing or increased, and to come to our webpage for updated posters and forms for you to post and, of course, distribute and get signed from your current and new employees. So yeah, I think that's basically it. We have come to the end of this particular session. Jade, is there anything you want to add? Any last minute thoughts?
No, I think we've covered it. Thank you.
Yeah, I want to thank everyone for making it to the end here. And if you have any questions, don't hesitate to contact us. Thank you so much, and we hope that this has been helpful. Take care. Bye.